The parabolic stop and reverse, also known as the parabolic SAR or PSAR, is a trailing stop-based trading system and indicator. It's commonly used by traders to determine trend direction and potential reversals in price. This can be an indicator as to where traders can see suitable entry and exit points in the market. The PSAR indicator is overlaid onto a chart and appears as a series of dots either above or below an asset's price, depending on the direction that the price is moving in. A dot is placed below the price when it's trending upward and above when the price is trending downward instead. Calculating PSAR values will require the use of some complicated formulas which may be off-putting for some. There's no need to worry, as most charting software will calculate these values for you, though it is useful to have a basic understanding of how the PSAR is calculated. But before we move on to the actual formulas, there are a few components worth discussing. Recall that the PSAR is a trailing stop-based system. In other words, it uses a trailing stop level which follows prices as it continues moving upwards or downwards. This stop level increases the speed based on an acceleration factor. This acceleration factor, AF, is a constant of 0.02 and increases by 0.02 each time a new extreme point is reached, with a maximum of 0.20. The extreme point, EP, refers to the highest high for an uptrend and the lowest low in a downtrend and is consistently updated whenever a new EP appears. Still with us? Great! Now that you've digested that information, we can reflect on the formula on the screen. The PSAR calculation is dependent on whether it is being used in an uptrend or a downtrend. Again, you don't have to worry too much about these calculations as they are calculated automatically for you on your trading platform. The PSAR is especially useful for traders that want to know where the possible reversals in price are, as well as those who want to know when a reversal will occur that will signal the end of a trend. If the dot switches its placement, it signals to us that the current trend is likely to come to an end soon. This means you should be looking to close any open positions before the price reverses against you. You can also think of it as a potential to open a new trade to benefit from the reversal if you don't have any current trades open. Thus, you'll be able to find suitable entry and exit points in the market. Many traders also choose to use the PSAR dots to set trailing stop-loss orders. However, one thing to note is that the PSAR moves regardless of whether or not the price moves. This means that if the price was initially in an uptrend but starts ranging, the PSAR will continue to keep rising. A reversal signal will be generated as long as the PSAR catches up with price. This instance may look as though price is going to reverse, but instead the price may just continue to range instead. Hence, a reversal signal from the PSAR does not necessarily mean the price will be reversing. Before the next video, like, subscribe, and turn on the notification bell so you're the first to know when is released.